Alright, strap in folks, because we're about to talk about the US housing market. And no, this isn't going to be one of those cheery HGTV segments with shiplap and impossibly perfect couples. Right now, the US economy and its trusty sidekick, the housing market, are going through some serious growing pains. So, put down the avocado toast, grab your thinking caps, and let's unpack this mess, shall we? Okay, let's talk deportations, shall we? It's a topic that's about as comfortable to discuss as a root canal with a side of sandpaper, but here we are. Large-scale deportations on paper might sound like they'd free up some housing inventory. More homes for the rest of us, some might cheer. Well, hold your horses, cowboy. It's not that simple. Deportations often target undocumented workers, many of whom work in construction and related industries. Fewer construction workers mean labor costs skyrocket, projects get delayed, or worse, canned altogether. That translates to fewer new homes being built, which, you guessed it, puts the squeeze on housing supply. And what happens when supply dwindles? Prices go up like a helium balloon with a housing shortage complex. Fewer people in the country means fewer people looking to rent or buy homes. So, you've got this weird push and pull. The bottom line is, mass deportations throw a wrench into the delicate machinery of the housing market. It's a complex web of interconnected consequences, and frankly, nobody really knows how this is going to play out. Alright, let's move on to another delightful topic: federal layoffs. When you lay off a significant chunk of the federal workforce, it's not like they're just going to dust themselves off and waltz into new jobs. Finding a job, especially after being unceremoniously ejected from the public sector, takes time. And time, my friends, equals missed mortgage payments. Missed payments mean one thing: foreclosures. And a surge in foreclosures is about as welcome in the housing market as a skunk at a picnic. See, when foreclosures go up, home values in the surrounding area plummet faster than a lead balloon filled with bad economic news. People who've lost their homes due to foreclosure still need a roof over their heads. So they turn to renting, which could potentially drive up rental prices in certain areas. The long and short of it is this: mass federal layoffs have the potential to send shockwaves through the housing market. Increased foreclosures, fluctuating home values, and unpredictable rental markets are all on the table. It's a recipe for uncertainty, and frankly, the only ones likely to benefit are the folks selling those how to survive the economic apocalypse survival kits out of the back of their vans. Chapter 3: Tariffs and Tribulations, Building a House of Cards. Now let's talk about everyone's favorite economic buzzword: tariffs. You know, those things politicians love to slap on imported goods like some sort of fiscal fly swatter. See, a lot of the materials used to build houses, your lumber, your steel, we need a grown-up to pronounce this, construction components, come from abroad. Now slap a hefty tariff on those imports, and what happens? The cost of building a house shoots up faster than a caffeinated squirrel on a trampoline. And who ultimately foots the bill for those increased construction costs? That's right, you do, the home buyer. Higher construction costs mean higher home prices, pricing many potential buyers out of the market entirely. Tariffs can also lead to material shortages and delays. Projects grind to a halt, timelines get blown, and everyone's left wondering if they'll ever get to live in a house that wasn't built during the Roosevelt administration. The bottom line is, tariffs on building materials are like termites in the foundation of the housing market. They might seem small and insignificant at first, but they can slowly eat away at the structural integrity of the entire system, leading to higher prices, delays, and a whole lot of frustrated home buyers. Chapter 4: The Mortgage Rate Maze, Navigating the Unknown. Let's talk about mortgage rates. Will they go up? Will they go down? Will they leave us bartering for homes with cans of beans? Mortgage rates are as predictable as a toddler on a sugar rush. They're high, which means higher monthly payments, and fewer people can afford to buy. Less demand in the housing market. High interest rates keep buyers on the sidelines. It's like selling a luxury yacht during a hurricane. Uncertainty makes buyers and sellers hesitant. Consult a financial advisor, do your research, and get ready to navigate this ever-changing landscape. Chapter 5: Fannie and Freddie's Excellent Adventure Privatization and the Housing Market. Let's talk about the elephant in the room: Fannie Mae and Freddie Mac. These GSEs have supported the mortgage market since your grandparents' time. Now there's talk of privatizing them, making the market uneasy. Fannie and Freddie buy mortgages, bundle them, and sell them to investors. This keeps the mortgage market flowing and helps people buy homes. But private companies focus on profit, not accessibility. Privatization could mean tighter lending, higher rates, and less flexibility. It's a gamble with major repercussions for the housing market. Only time will tell, but it's a development worth watching closely. Chapter 6. The housing market. Hold on tight. So, there you have it, folks. The U.S. housing market in a nutshell. It's a roller coaster ride of mass deportations, federal layoffs, tariff-induced whiplash, mortgage rate roulette, and the privatization two-step. Yes, the housing market is facing some serious challenges, but it's also incredibly resilient. It's weathered storms before, and it will weather this one too. The key is to stay informed, make smart decisions, and maybe invest in a good helmet because this roller coaster shows no signs of slowing down. Stay tuned, stay informed, and for the love of all that is holy, buckle up.